Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equities are set to end the week on a positive note, even as earnings somewhat disappoint. SGX Nifty indicates a mildly positive start coming in for the broader index. S&P 500, Dow Jones logged the best day since January yesterday. Nasdaq too was the top gainer. In terms of the GDP data in the US, it's grown by more than 1% sequentially versus the expectation of 2% sequentially. A bit of disappointment when it comes to the macroeconomic setup. But Asian shares at this point of time have surged ahead of BOJ policy decision. FII, they've bought shares worth around 1,652 odd crore, and DIIs too have purchased shares, but to a minuscule amount, which is less than 100 odd crore. In bunch of stocks that we'll be talking about or that will be coming out with the numbers today will include the like of Ultratech Cement, SBI Cards and Payment, CSB Bank, L&T Finance Holdings. These are going to be some of the companies which will be in focus ahead of the March quarter earnings. So let us get going and discuss some stocks and strategies today with Hemen Kapadia, Choksey Securities out there. Hemen, it's a slew of earnings have come in yesterday, 4 consecutive session of gains coming in for Nifty. Do you think 18,000 mark is just a little away from the index? How do you look at it?
A very good morning to you, Nickey. Thank you for having me. Yes, I think you've got it perfectly. 18,000 mark is there for the taking. Frankly speaking, we've walked into 17,800 multiple times. That has been a source of strong resistance in the past. And yesterday we've taken that out with conviction. So frankly speaking, 18,000 and probably 18,200 is on the horizon. We have support from the Bank Nifty. And there's one hidden stock which hasn't moved, Reliance. So once Reliance moves sentiment-wise, weightage-wise, I think the setup is positive. So frankly speaking, I wouldn't chase the gap up. But yes, I think what you said makes perfect sense. 18 and beyond 18.
All right. So clearly a bullish indicator out there. Index heavyweight Reliance, some support lent up from there, and you can see the markets scaling past that 18,000 mark. But talk about Bank Nifty Index. What do you make out of it, and what's your strategy out there?
Nickey, frankly speaking, it's more of one way. I would be slightly cautious at these levels because, okay, we've moved up from 38,600 to 43,000. And no respite, but 43,100 is a source of very strong resistance. We are opening another gap up. So I'd say we've had a brilliant run. It still looks fine. Once again, I wouldn't chase it. I feel private sector PSU banks look relatively safer than private sector banks at this point in time. Nickey.
When you say PSU banks look relatively better as compared to the private sector bank, of course, Axis Bank has reported a number, has posted loss, but that's account of the buyout of the city business out there. Within the PSU banks, what do you like?
I think the safest one is State Bank. It normally leaves the market, Nickey. I mean, if there is a move on PSU banks, State Bank is the one which moves first. But the way I see it, the pecking order would be State Bank, Can Bank, and Bank of Baroda. These are the ones which look great. They are an FNO also, but they are the ones which look good. And even from a slightly medium-term point of view, let's say if you have a time frame of 6 months or so, many of these PSU banks are looking quite promising. Thank you.
All right, so let's actually address in the top stocks that we have for the day and then come back to Hemen and chat with him the 2 profitable ideas that he would give out to our viewers at this point of time. But bunch of earnings that I'd like to address, and the list is rather long and important ones, right? You have in the likes of something like a Wipro, Tech Mahindra, ACC, Hindalco. These are some of the stocks that we have on the list right now. But I'm going to start off with the quick take on the IT earnings first. Wipro, where it's a disappointing Q1 FY24 guidance. Margins have been in line. It's witnessing slower ramp-ups and discretionary spends out there, but no talks about the cancellation. Hasn't seen any kind of loss when it comes to the customers or any material deal termination, just in the way Infosys mentioned, So that's a little bit of positive, but the guidance overall isn't really something to write home about. FY24 estimates growth to remain muted despite strong order book. What also comes as a solace for this company is the buyback plan, right? It's 12,000 odd crore of buyback that the company has announced, and it's probably the first one in nearly 2 years. It's through tender route. The floor price has been set around 445 odd share. Right now, the share is quoting at around 380 per share. That indicates a premium of roughly 19-20% from the current market price. And this buyback represents almost 4.9% of the total paid up equity capital. L&T Mindtree, that's another one which reported numbers right after the markets out there. This miss on revenue, inline margins. MOSL feels that the deal wins are expected to drive FY24 growth despite near-term hit. Tech Mahindra, talk about that because Wipro and Tech Mahindra were the ones who actually came out with results right after the market hours. Tech Mahindra is also a miss on margins. There's a further decline coming in on the head count, and the expectation is that the FY24 growth may remain muted. What Motilal Oswal has to say that even then the company has reported a margin improvement, it's going to be likely hit by the slower growth. So that's the word coming in for Tech Mahindra. Wouldn't really be surprised if you see some sort of negative reaction coming in for the IT stocks, but do bear in mind the fact there's been a substantial drubbing which has already come in through all the large cap IT names. Could be that all the negatives have been priced in, given that there are a slew of downgrades already come in for Tech Mahindra in anticipation of such earnings. So you might just not see such a stark reaction coming in on the stocks right now. Axis Bank, that's another one on our list. The private lender has reported loss of around 5,728 crore. This includes buying cost of Citibank India consumer business during the quarter. Overall, if you talk about the banking sector, it's been a decent show out there. ICICI Bank has done splendid amongst the player if you talk about all the results per se when it comes to at least the private sector bank, right? ACC, that's another one ahead of in focus today. Ultratech would be reporting in numbers today, and ACC has reported in line set of operating performance. It's a pan-Indian player, right? So sets benchmark for all the other ACC, Ambuja, Ultratech, Hemen, Dalmia Bharat has already reported a number. But for this one, ACC, inline performance, volumes is where the beat is coming from. And also it has, the Amita plant has been, there is a delivery update out there that's going to be commissioned in the second quarter of the financial year. Laurus Labs has seen a downgrade coming in from Jefferies. Target price has been revised lower, and there is an initiation report which is coming for Hindalco by Nomura out there. So that's going to be an interesting one, and we're going to be addressing that in just a jiffy right after we address the market opening for you. But do remember the fact that it's fourth consecutive day of gains coming in for Nifty right now. And with that, we are looking at somewhat momentum continuing. Remains to be seen if the last session of the week, yes, somewhat seems to be on a positive note right now. Remains to be seen if it ends that way. We're headed for the long weekend out there. Monday is a leave out there. Nifty 50 out there. 0.1%, 0.2% gains coming in around that 17,940 mark. Floating around that 18,000 mark. Remains to be seen if it hits that mark in today's session. Talk about the bank Nifty right now, just to see it's with some amount of resilience already there, right? You're seeing that outperformance coming through, and Nifty Bank today also is holding up for you. More than 0.1% of gains coming in, comfortably holding about that 43,000 mark out there. Talk about the other sectoral indices that we have on the list right now. Something's in the like of IT, something in the right of realty. Well, IT index too is holding up with gains of more than 0.5% out there for you. It's an interesting day for IT sector. Wipro, Tech Mahindra, LTI, you have a bunch of companies now which have technically reported in their March quarter earnings. In other sectoral indices that we have on our list right now, Nifty Realty Index, that rate sensitive has been holding up for you, right? It's witnessing significant amount of demand and price hike. The index right now is up and above with gains of around 0.2%, and Auto 2 has been doing well. March quarter numbers have been splendid. They've been able to take that price hike, more than 0.25% on that one itself. And metal, after witnessing some amount of losses in previous session, is finally up in green for you. 0.3% of gain coming in for Nifty Metal. Nomura has initiated a buy report on Hindalco, so that's going to be an interesting one within the space per se. Nifty Pharma Index, we're seeing flattish trend with some amount of positive buys building in for Nifty Pharma Index overall. Talk about the other sectoral indices that we have on our list. FMCG basket right now. You know, after HUL numbers, those steady set of numbers, but not really very encouraging. 0.5% gone out on this one. But overall, talk about Nestle, talk about Tata Consumer Products, all of them have done well so far in the quarter thus far. So that's the trend playing out overall for the FMCG and the consumption basket out there. Infra too, for that matter, has been, somewhat, there's an order book building in. It's a pre-election year, but remains to be seen. Right now, it's holding up in green for you with gains of more than 0.2% out there. But let's also address in the top gainers and the top losers that we have on our list. Advances 33, decline 16. So market red in the favor of advances right now. Ola, Wipro, UPL, Apollo Hospitals, these are the top gainers. Infosys, Adani Enterprises and Adani Ports. So clearly looks like the street has already factored in that negative commentary and the the earnings profile out there. So it doesn't seem like a disappointment, and markets have actually, the IT stocks have actually bounced back in green to be one of the top gainers that we have on our list. L&T, TCS and Coal India. These are some of the other gainers that we have on the list right now. ONGC, Bajaj Finserv, HCL Tech. These are some of the losers that we have on the list. HUL, despite steady set of numbers, a bit of miss coming in on the margins, down and out. Power Grid and BPCL. These are some of the top losers that we have on our list right now. But it's surely an interesting day coming in for the IT sector. Specifically, let's look at Wipro and Tech Mahindra first again. The splendid gains out there, shining bright despite not so good commentary and not so great set of numbers. Looks like most of the negatives are now priced in for these ones. So these are clearly good set of numbers, I would say. At least in terms of the stock momentum, it's a bit of relief. For Wipro, there is this massive buyback plan which has come through, which is probably acting as the required trigger for this company, which hasn't really done too much in the last 1 or 2 years, if you may ask. But overall, right now, that's Wipro for you, that's the buyback for you, and those are the IT names for you. So clearly an interesting day of trade where FMCG isn't doing too well, but the other defensive sector, which is IT right now, holding up in green for you. Hemen, come in on this one. What do you make out of it? Much of the negatives were already priced in. Commentary, if you talk about the buyback plan, that's probably worked in the favor of Wipro. Tech Mahindra is also holding up. Between the two, what do you like?
Nickey, I think Wipro looks a bit better. Technically, like I said, we've held on to lower levels. 355 have been very strong medium to long-term supports. We've held that. And frankly speaking, if you look at the whole IT index, we peaked somewhere in January 2022. We've almost 1.5 years into a correction. Many of them are oversold, and specifically Wipro, yes, like you said, you captured it very well. Time being the worst seems to be over. Everything seems to be discounted in the price. A bounce is underway, and if we close about 390 on the weekly chart, I believe that would be a further upside. So if you compare Tech Mahindra and Wipro, clearly Wipro. Nickey.
All right, so Wipro is the word coming in, and also something like an HUL. It reported a miss when it comes to the volumes. Top line and bottom line wasn't really in sync with what the estimates were, but it ended the year somewhat on a steady note. How does the chart look right now? And within the FMCG basket, what do you like, Amit?
I think from a slightly near-term point of view, it would be a toss-up between Dabur and Marico. But if I look at Lever, Lever leads the market up or down. And we've seen some weakness come in. But if you look at it from a slightly longer-term point of view, Lever has been range bound between 2734 and 2375 for the past 8 months or so. So there isn't any clear directional bias. Yes, near-term pressure seems to be built in. The price is already showing that. 2420 is a level to keep a watch out for, Nicky. We have not closed below this level since the weekend at 1st July 2022. So I believe that's the support could come in. So not, I wouldn't be unduly better, but yeah, near-term Marico and Dava look better.
All right. Thank you, Main, for taking out the time and speaking to us this morning. I'm going to quickly address in Hindalco right now. Nomura has come up with an initiation report out there with a buy target of around 540 odd rupees. It says that it's structurally amongst the low cost players globally and demand supply tightness in the medium term to support the global prices right now. It says that overall Indian primary smelter benefit to the extent of around $550 to $600 per ton versus the global average, and the benefit is based on an advantage coal sourcing and bauxite integration out there. So that's the word coming in when it comes to the overall Hindalco. I'd like to chat a little bit more about the fundamental side of the game, right? And we're being joined by Amit Jeswani, the founder CIO, Stallion Assets. Good morning there.
Hi, Nicky. Good morning, and thank you for having me on your show.
Right, pleasure is all mine. But I'm going to start off by asking you about what your assessment on the overall IT space. Today we're seeing Wipro doing well, Tech Mahindra is doing well. Looks like negatives have all priced in, and buyback has offered the required solace for the markets right now.
See, the times are tough, Nicky. If you think about it, 1 year before today, we were all speaking about crises, right? That they're not able to hire as many people as they want. The growth is unlimited, but people is a problem, and margin was a problem. 1 year later today, it's exactly opposite. They're all reporting negative quarter-over-quarter additions. The growth is a problem. It's completely a challenge. Infosys was a howler. KPIT was the best numbers in this entire lot. When the first time we saw TCS numbers, we were very disappointed with 1.6% growth rate. But then when we saw the other IT companies, TCS started looking way better. So it's been a weak quarter, but these are decent, very good long-term bets. If you look at globally also, cloud, which is the digital part, the cloud revenues of Google, Azure, they're not slowing down. So this slowdown looks like a 3-6 month kind of slowdown, and things should get back to normal as things go back to normal.
Yeah, Amit, you know what? TCS is also planning to double the employees' salary by upskilling them. So that's also one of the positives that we've seen from the IT read-through thus far. And if we also talk about the mid-cap IT space, it's much of an surprise out there with most of the top-tier mid-cap names actually doing better than most of the larger counterparts, at least when it comes to the earnings and the guidance as well. What do you make out of it?
See, if you look at Persistent, the numbers were very good. If you look at Coforge did 5% quarter over quarter. It's like, what recession, what? That is what Sudhir was saying on the call. Basically, a mid-cap. Typically when the rally happens, the entire sector rallies together. So whenever the clouds go away, and that should be probably next 2, 3, 4 quarters as the Fed starts printing or the rates come down. I'm very confident that mid-cap ITs will lead. If these are the numbers which they can deliver, they will of course lead, because it's now simple. Infosys has guided for 4 to 7% growth. Your large cap IT will grow at single digit. Your mid-cap IT will grow at, like Coforge has guided for 14 to 16%. Persistent has guided for near 18 to 20%. So if you look at what the mid-cap IT is doing, they are on a different trip. So as soon as the cycle reverses, as soon as some clouds go away, these will be the first ones to rally. But there's one problem in Coforge: whenever it rallies, Blackstone comes and sells his stake. So that's one supply problem in Coforge. But regardless, over time, in mid-cap IT should do better than large-cap IT. That is for sure, because even in bad times, mid-cap IT is doing better than large-cap IT. So first, the good times, mid-cap IT did well. Now in the bad times also, they're doing well. Let's see how this goes. Looks interesting.
Amit, I would kind of have a different point of view here. We've not even spoken about the entire recession part right now. We're just talking about slowdowns right now. And you are seeing amount of cancellation coming in for the large cap IT names. Something like an Infosys came and said that, there's a cancellation which is taking through. But do you think vendor consolidation and the macroeconomic challenges with the pocket of concentration that we have in certain geographies for most of the mid-cap ITs would probably play more of a spoil sport for these players as compared to the larger counterparts?
So, Nickey, we'll have to track data. So, right now, our position, we've been underweight tech for like some time, not a long time, 6 months back, we went underweight tech. Let's let the clouds go away. Then we'll see who's done well in bad times. You will come to know the tech. It's all about, the growth rates. You'll just see the bad cycle. Whoever does well. We have to just buy 1-2 stocks in the entire mid-cap basket. Whoever does well in the bad cycle. And the important criteria, Nickey, here is TCV. What is your total contract value that these guys are doing? So mid-cap IT, TCVs are not a problem at all yet. Now let's see what happens. So right now, you don't have to be super aggressive in tech, right? There is no reason to be super aggressive, but as things start improving, you'll come to know which players are the better ones in the entire lot. Our goal is to buy the better ones, the relative outperformers in the entire basket, right? Just look at this data. Every quarter, every 90 days, we'll be blessed with data. What is happening? Who's doing what in bad times? Are they acquiring? Are they doing more buybacks? So these guys are cash machines. They can do buybacks and increase their EPSs also. And yes, vendor consolidation and all that will, of course, they've happened in bear markets. Let's see now what happens this cycle. This cycle is not exactly similar to the previous cycle that we've seen.
All right, Amit, I was asking you that amidst the lot that you've suggested thus far, which are the players which have outperformed the larger counterparts within this earnings season? You talk about Coforge, you spoke about Persistent Systems. Mastek did well too. Persistent System also. KPIT was something which wasn't really very encouraging. So within the space, what do you like?
No, so we have positions across, but I can't speak about stocks, what I like. But outperformers, I can tell you, you're right. KPIT is the number one, but the valuations are really expensive there. Number two, I would say, was this is Persistent. Number three, Coforge. So these are the three ones who've done well. Mastek, some time away.
All right, so Mastek has clearly delivered good set of numbers, and I remember the stock was more than 8-9% up after the earnings have come through. But Amit suggests at this point of time, it's still some time away as compared to the other peers right now. But let's talk about the banking sector also. Axis Bank reported in losses because of the Citibank acquisition out there. So that's already weighing down on the bottom line performance. ICICI Bank delivered good set of numbers, all round beat. What do you make out of the space and what do you like within the basket?
There are only three things that you have to look out here. Okay. The growth broadly in all three players is same. HDFC, ICICI. See, these guys are still gaining market share. Axis, ICICI Bank, HDFC, and then you have a Bajaj Finance and Chola, the two NBFCs who are gaining market share. These five, in my humble opinion, they're getting better at size and can be outperformers in the long term. So all five of them, the two NBFCs and the three banks that I spoke about, they're firing on all cylinders. If you look at HDFC this quarter itself, they opened 700 branches because they, of course, when HDFC Bank gets HDFC Limited, you are adding 16 lakh crores of HDFC and 7 lakh crores of like the housing finance HDFC Limited book. So you need CASA because you'll have to keep 18% as SLR, right? So HDFC is adding branches aggressively. That's why the PPOP growth of HDFC Bank looks lower than that of ICICI Bank. But both banks are firing on all cylinders. Axis is cheap relatively and doing decent. I won't say super well, but ICICI, if you ask me fundamentally who's doing the best, it's ICICI Bank. The NPA this quarter, except for the provisions, the NPA this quarter, the gross NPA for ICICI Bank was 14 crores. They did an extra contingent provision of 1,600 crores. But I have never in my life seen the kind of no credit cost environment. I'm not speaking low credit cost. This is near zero credit cost environment across banks, and this is basically the Cinderella moment, as Uday Kotak had said, for banking, where your NIMs are very high. Who could have even imagined that ICICI NIMs would be 4.9% in a quarter? This 2 years, 3 years back, even 4% looked like a dream, and they used to be at 3.2, 3.3%. It's unbelievable what Bakshi has done in ICICI Bank. Looks good. All these banks over time will do better than the index, I believe. These 5 names that this is not a recommendation. We have vested interest, but these 3 players on banking and 2 NBFCs should over time perform. But one more thing on the NBFC side, one thing I am very sure that lending will be digital, and one of the best, it was like a MBA con call that I heard this time was with Bajaj Finance. If you see, your corporate loan growth has been 5%, and this is what Rajiv Jain was saying. I'm just repeating what he was saying. 5% has been your corporate loan growth. Virtually every PSU, every private bank, and every NBFC is focused on one thing, and that is retail lending. All lending in retail today, in India today, is largely retail lending, which is happening. Anyone who owns the distribution, and that is what Bajaj is trying to do, they own the distribution via the technology platforms that they are creating. Anyone who owns the distribution here with lending, great lending, capital will become a commodity, distribution will become the mode. And that is what, so that is where banking is going. It's going to be 100%. Like the smaller banks are doing well, but over time, I believe it's the larger banks who will nail it.
All right.
And the larger NBFCs and the ones who have distribution.
Okay, all right. Amit, even in terms of these tech-based NBFCs these days, something like of Punawala Finance reported splendid set of numbers, right? Something like a doubling of profits year-on-year basis. We saw a healthy amount of asset quality growth coming in. The growth has been phenomenal for the last 2-3 years. It's not a recommendation of sorts anyway, but it's just to point out fundamentals out there where you're just telling that, these 2-3 things seem to be moving for the basket. How do you read that?
So if you see Abhay, he's a hyperscaler in that context. The profits of Punawala this year was 580 crores, but there was a 144 crore credit reversal. I can't believe that Punawala has sold his housing finance book at 3,900 crores to TPG Capital. It's been one of the best ever deals that Punawala, that Abhay could have done. This year, the profits look very high because they have a negative provision of 144 crores out of the 580 crores of profits. So you'll have to adjust that. These are unsecured lending that they are doing with great speed and pace. 16,000 crores is where the loan book is, and they've guided for 40,000 crores in the next 2-3 years. I want to see the credit cost. So what Abhay has said on the con call is that the credit cost will never go above 1% in the kind of lending Punawala FinCorp is doing. Now, I have never ever seen that, even for Bajaj Finance, I've not seen that you do personal finance, second-hand cars, and SME lending, and your NPA will be less than 1%. So if he can do what he's saying, because your spreads, you're borrowing at 8%, you're lending at 18-20%. Okay. So if you can basically do this with zero credit cost, or like 1% credit cost, you're godlike, and the markets will bid it up. But for now, you'll have to see, we don't have any interest here, but we'll have to see, can he achieve? But what he's saying is
Amit,
very ambitious.
Amit, I would like to...
The growth of AUM will happen. They have enough capital. The credit cost part, I'm not so sure.
Sure. So, Amit, I was just trying to say that, we are approaching towards the wrap of the show, and we have very little limited time left to us. Just one last question that I would squeeze in is, of course, we've spoken about NBFC. Today, Ultratech Cement will be coming up with numbers. And it remains to be seen how does that one actually perform. ACC's delivered in-line set of numbers, and volume also, for that matter, has been better than what the street was estimating. So what are the expectations from Ultratech Cement and overall for the cement basket per se?
Nickey, honestly, I don't track cement so well, so I'm not the right person to speak about cement. So sorry.
All right, so we're going to leave, the discussion with the cement space right out there. But Amit, thank you so much for taking out the time and speaking to us extensively about the IT basket, NBFC, and the other spaces per se. Thank you so much. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen for rest of the updates. Stay tuned into moneycontrol.com and Moneycontrol app.
How many companies you look up?
I may look up 4, 5, 6, 7 or more. Whatever is of interest, it could be more than that, I look up. Before coming here, I was going somewhere else. I looked up 5 balance sheets on Moneycontrol, not necessarily the company, to understand this is in the banking space, to look at what has happened to capital, what has happened to profitability, what is happening to ROE. I was speaking somewhere else.
Yeah.
So I'll do it on the fly. This took me exactly 3 minutes, thanks to Moneycontrol. First thing to come up is Moneycontrol. So I don't even have to scroll down to look at. I click and I get what I want.